Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, oil prices are down, but energy investing isn't out. Barron's convened a roundtable of experts to find out where the pros are prospecting. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Megan Leonard, and Andrew Barry. So, Ben, investors like volatility when it goes up in the right direction. It was a big week.
We certainly had that this week. Yeah, we were up 5.3% in the S&P 500, which is a big gain, but only the biggest since April 11th, the weekend of April 11th. But it was really, it all came down to a couple things. One was the agreement reached with China to pull back on those really massive tariffs that we had. But also there's Trump went to Saudi Arabia, talked up AI, made some deals and things, and that got the AI trade going again. He had some big moves in the Mag 7. And by the end of the week, it was just a fantastic week for stocks.
Andrew, do you like what you saw?
Yeah, I mean, I think we've got like Trump 1.0 now. I think tariffs are taking the backseat to a more like supply side approach. I think the market likes that.
Yeah, clearly the market has decided we're not going to build a huge tariff wall. It's back to globalization, dare I say it. Bond yields moved up this week. Now, that could mean a lot of things. It could mean that investors see better growth ahead. It could mean inflation fears.
Or it could be something else. Randy Forsyth, who writes the Up and Down Wall Street column this week, is actually concerned that the higher bond yields were a reflection of the deficit that could come with the budget working its way through the, Congress right now. And if it goes up too much, you're going to have people demanding more yield from their bonds. And you could see bonds go up to 4.7% on the 10-year, which could really cause big problems for stocks.
Yeah, to me, I mean, I think bonds are starting to discount some of these problems. You had the 30-year Treasury hit close to 5% yield this past week, and that's been the upper end of its recent range. And so if you're interested in bonds, you could buy ETFs like the TLT, which is a 20-year Treasury.
And a few Republicans voted that, yes, indeed, the deficit is too large. And so we'll see what happens there. All right, next week, we don't have much in the way of economic reports, but we'll have retailers reporting earnings, and that can give us an indication on the health of the consumer.
That's right. I mean, we already got Walmart this week saying basically that they're going to have to raise prices because of the tariffs that are going through. And we're going to hear from some more. We're going to hear from Target, Home Depot, Lowe's, and others. And we're going to be listening both for what are they doing on the pricing front, but what they're telling us about what consumers are doing right now. Because the consumers run the economy. I mean, if the consumer is shopping, we're doing great. If they're not, we have problems. So that's going to be very important to watch.
Megan, that Walmart statement by the CEO, does that mean that rate cuts are off the table?
At least for now. I think it's one of those situations where we've had a lot of, interesting inflation data this week. So we had the consumer price index. It came in at 2.3% year over year in April. That is tantalizingly close to the Fed's 2% goal. And then, of course, we had wholesale prices come in this week as well. And those were actually a lot lower than we expected. Both good news. But the big problem is no one can get complacent at this point. We do have those tariffs coming. And as Ben pointed out, we have had a lot of retailers saying we're going to have price increases.
I mean, to me, the Fed should be cutting sooner rather than later. I'm with Trump on this one. Inflation's running close to 2%. The Fed's keeping short rates at 4.25 to 4.5. To me, short rates ought to be a percentage point lower than where they are right now.
I disagree. I do think that the Fed's really being a very responsible central banker right now. They're in wait-and-see mode. These tariffs, the magnitude, we really haven't seen this in our lifetime, my lifetime, certainly. And so I do think it's one of those situations where we really have to wait and see what we're going to expect from inflation, because bottom line is, if retailers are telling us they're going to raise prices, consumers are going to feel it.
You actually shared with me an economic report that said we can't tell where tariffs are going to send inflation now. It's like trying to judge commuter traffic at 4 a.m.
Exactly.
You've got to wait a few hours, or in this case, a few months.
Yes.
Andrew, it has been a really awful 6 months for UnitedHealthcare. Of course, the CEO of the health insurance arm was murdered back in December. Now the CEO of the entire company has stepped down, and the Wall Street Journal reports the company may be under investigation, criminal investigation.
Yeah, it's been a disastrous stock this year. It's been the worst stock in the Dow Jones Industrial Average, down about 40%. And so the big issue for investors is it a buying opportunity or is it a value trap? And so the bulls say this company's historically been the best managed company in the industry with growth prospects. It's been typically a low single digit or low double-digit grower in terms of earnings. And basically, the stock is trading potentially now for only about 11 or 12 times next year's earnings, which is historically low. You actually saw some insider buying late this past week, which is favorable. I mean, the bear case is that there may be more bad news coming out, and this investigation could be problematic. So some investors are taking a wait and see, but you also have others who are thinking that at this valuation, it's worth a look.
So we heard the bear case, the bull case. What's the beary case?
I would say it's worth a look at these levels. I think the fact you saw insider buying suggests that the people inside the company are more optimistic than some on Wall Street. It's also hurt the Dow. It's probably cut about 2 to 3 percentage points off the Dow's return this year.
So you have been looking not only at this company, but really at the entire healthcare complex. We've talked about how biotech stocks have gone nowhere. What's your view? Are there opportunities there yet, or is it still a falling knife?
To me, there are interesting opportunities throughout the whole drug sector. Pfizer, Merck, Bristol Myers have been hit hard. Novo, the diet drug companies, has also gotten hit. I mean, you have 4 to 5% yields in many cases on drug stocks, amid concerns about what Trump may do in terms of drug pricing and patent issues and other things. But some of that's discounted now in the stocks.
All righty. Thanks, Andy.